What is happening, crypto champions? Get ready to ignite your screens because the news cycle is absolutely exploding, and you are tuned into the only place that breaks it all down with the energy you crave. We've got seismic shifts in how you can grow your digital assets, incredible predictions about where the market is headed, and a deep dive into the major players shaping the trading landscape. This is not just an update, it's your front row ticket to the future of finance. Buckle up, because if you're not watching this, you're missing out. First up, a groundbreaking move in South Korea is set to redefine Bitcoin ownership as we know it. We're talking about a revolutionary new service that could unlock massive potential for both everyday investors and the big players. Get ready for details that will have you rethinking your entire strategy. Then, we're diving headfirst into the crystal ball, exploring whether the king of crypto is on track for an astronomical surge, with some analysts placing it at a mind-blowing $500,000. Is this just hype, or are we on the verge of a historic financial revolution? We've got the data, the predictions, and the potential pitfalls you need to know. And that's not all. We're pulling back the curtain on the massive trading war that's shaking up the digital asset world, pitting the giants against each other. Who's leading the charge, and what does this mean for your investments? You won't want to miss this. Finally, we're breaking down the fascinating comparison between the stability of gold and the explosive potential of Bitcoin. Is one a better bet than the other right now? We've got the insights to help you make smarter moves. Stick around, because this is the Bitcoin Bulletin. Korea's first Bitcoin staking service launched. South Korea is making waves in the cryptocurrency world with a monumental development in Bitcoin accessibility and yield generation. Coinone, a prominent exchange in the region, has officially launched the nation's very first Bitcoin staking service, a move poised to revolutionize how both retail and institutional investors engage with their digital assets. This innovative offering allows users to earn rewards on their Bitcoin holdings without the traditional constraints of locking up their funds or sacrificing liquidity, marking a significant leap forward in the crypto financial landscape. At the heart of this groundbreaking service is the utilization of the Babylon Protocol, a cutting-edge cross-chain proof-of-stake protocol. This integration enables users to delegate their Bitcoin to secure the network, thereby earning rewards in the form of Babylon's native utility token, baby. What sets Coinone's offering apart is its unique, flexible staking model. Unlike conventional staking mechanisms that often require assets to be locked for extended periods, Coinone's platform allows users to deposit, withdraw, and even trade their Bitcoin seamlessly, even while it is actively participating in the staking process. This unparalleled flexibility caters directly to the dynamic needs of both active traders seeking opportunities and long-term holders aiming for passive income, all while maintaining control and access to their capital. This innovation is particularly significant given Bitcoin's inherent proof-of-work consensus mechanism, which does not natively support traditional staking, as seen with proof-of-stake cryptocurrencies like Ethereum. By bridging Bitcoin with the Babylon Protocol, Coinone has effectively found a compliant and user-friendly way to unlock yield-generating opportunities for the world's leading cryptocurrency. The exchange has also rebranded its staking services, introducing flexible staking and fixed staking to provide clearer options for users, complemented by an updated interface designed for enhanced transparency and ease of use. Investors can now monitor their staked assets and accrued rewards through a dedicated dashboard, ensuring a transparent and informative experience. Coinone's strategic move positions South Korea at the forefront of global crypto innovation. In a market often challenged by regulatory ambiguity, Coinone's secure, compliant, and accessible approach could set a new benchmark for other exchanges. By unlocking yield for Bitcoin, this service has the potential to attract a broader mainstream audience, transforming asset management strategies for Korean crypto traders and merging security, income generation, and accessibility into a single, compelling package. But is this the only major development shaking up the crypto space? Keep watching, because we're about to explore some truly astronomical price predictions. Next, we're diving deep into whether Bitcoin's value could skyrocket to an unbelievable $500,000 by the end of the decade. Bitcoin's $500,000 price target, hype or inevitable? The cryptocurrency market is abuzz with talk of Bitcoin's future, with many seasoned analysts and investors boldly projecting a staggering price of $500,000 by 2030. This isn't just fringe speculation anymore. Major financial players are increasingly making substantial bets on Bitcoin's exponential growth, fueled by its inherent scarcity and a seemingly favorable macroeconomic environment. The convergence of increased institutional adoption, the predictable supply reduction through halving events, and evolving regulatory clarity is creating a powerful narrative for a significant price appreciation. Bitcoin's programmed scarcity, enforced by the halving event that occurs approximately every 4 years, systematically reduces the rate at which new Bitcoins are created. Historically, each halving in 2012, 2016, and 2020 has preceded significant bull markets, with subsequent gains reaching thousands of %. The most recent halving in April 2024 is expected to follow this historical pattern, with many analysts, including those at Glassnode, observing that market cycles continue to rhyme with past performance, potentially peaking in late 2025. What distinguishes the current cycle is the unprecedented entry of Wall Street into the Bitcoin ecosystem. The launch of spot Bitcoin ETFs in the United States has acted as a major catalyst, democratizing access for a broader range of investors. By mid-2025, investment in these ETFs surpassed all of 2024's figures, accumulating billions of dollars and resulting in institutional investors acquiring a substantial portion of the circulating Bitcoin supply. This influx of institutional capital is altering market dynamics, with large players now more inclined to buy during price dips, a behavior that previously triggered sell-offs among retail investors. Furthermore, regulatory progress in the US has provided a much-needed framework for institutional investors. New legislation clarifying rules for stablecoins and digital assets offers the certainty required for significant capital deployment. A supportive political climate, including executive orders that allow for the inclusion of crypto in retirement savings plans like 401(k)s, further integrates Bitcoin into the mainstream financial system, potentially unlocking trillions of dollars in retirement assets. However, the path to $500,000 is not without considerable challenges. Bitcoin faces competition from newer, more agile blockchain networks like Ethereum and Solana, which are attracting significant developer talent and capital with their advanced technologies and functionalities. The rise of central bank digital currencies, CBDCs, also presents a potential threat, as governments could leverage these digital currencies to compete with or even suppress decentralized alternatives like Bitcoin. While the US has not yet launched a digital dollar, this could change, impacting the landscape of digital finance. Moreover, unforeseen black swan events or technological disruptions, such as advancements in quantum computing that could compromise cryptographic security, pose systemic risks. Despite these hurdles, the confluence of shrinking supply, massive institutional inflows, and an increasingly defined regulatory environment presents a compelling case for a significantly higher Bitcoin price. Achieving $500,000 would signify a profound shift in global financial power structures and redefine perceived value. While the future price of Bitcoin is a hot topic, the present-day trading arena is equally dynamic and competitive. Next, we're diving into the massive trading war currently underway, examining who's dominating the Bitcoin spot market. Binance's dominance in Bitcoin trading surges past ETFs. In the rapidly evolving cryptocurrency market, centralized exchanges continue to command significant trading volumes, with Binance leading the charge in Bitcoin spot trading. The global crypto giant is reportedly processing over $18 billion in daily Bitcoin spot trading volume, capturing an impressive 29.1% market share. This substantial volume places Binance significantly ahead of competitors like Crypto.com and Coinbase, and notably surpasses the trading activity generated by the newly launched US Bitcoin exchange traded funds, ETFs. Binance's robust infrastructure and extensive global user base have enabled it to maintain a dominant position, particularly during periods of heightened market volatility. For instance, on a recent day when Bitcoin reached an all-time high, Binance recorded $7 billion in Bitcoin spot volume, outperforming the $4.8 billion generated by US Bitcoin ETFs combined. This highlights Binance's critical role as a primary venue for traders seeking to capitalize on price fluctuations in the world's largest cryptocurrency. While US Bitcoin ETFs have seen growing adoption and institutional interest, capturing approximately 13.1% of the Bitcoin spot trading volume since their inception, they have yet to eclipse the volumes seen on major centralized exchanges. These ETFs, which regularly generate between $5 billion and $10 billion in daily trading volume, represent a significant step towards mainstream adoption, but still trail behind the liquidity offered by platforms like Binance. Interestingly, the narrative around institutional capital flow shows a notable rotation towards Ethereum-based products. In August 2025, Ethereum ETFs attracted substantial net inflows totaling $4 billion, contrasting with Bitcoin ETFs, which experienced outflows of $800 million during the same period. Leading the charge in Ethereum inflows were products from major asset managers like BlackRock, ETHA, and Fidelity, FETH, which collectively saw $309 million in new investments by late August. This trend suggests a growing institutional appetite for Ethereum, driven by factors such as its ongoing network upgrades, Ethereum 2, and the expanding utility of its ecosystem. Despite the increasing prominence of ETFs and the shift in institutional focus towards Ethereum, Binance continues to solidify its leadership in the spot trading market, especially for Bitcoin. The exchange's ability to handle massive volumes, coupled with its diverse product offerings, including flexible lending, fixed-term loans, and a wide array of supported assets, appeals to a broad spectrum of traders. Binance's lending platform, for example, offers competitive loan-to-value ratios, up to 80–90%, and attractive interest rates as low as 1% APR, providing sophisticated traders with leverage options for various strategies. These services are particularly beneficial in regions where traditional financial infrastructure may be less developed, offering higher liquidity and lower transaction costs. However, Binance faces ongoing regulatory scrutiny from bodies like the SEC, which could impact its operations and investor sentiment. Despite these challenges, Binance's adaptability and strong user trust are key factors in maintaining its market leadership. As we analyze the major players and market dynamics, it's also crucial to consider the fundamental value propositions of different digital assets. Next, we'll be comparing Bitcoin's strategic value against the traditional safe haven of gold. Bitcoin versus gold, a volatility-adjusted case for strategic investment. In the ongoing discourse surrounding investment strategies, the comparison between Bitcoin and gold as stores of value remains a persistent topic. While gold has historically been the benchmark for a safe haven asset, recent analyses suggest that Bitcoin, when adjusted for volatility, presents a compelling case for strategic entry. This perspective challenges traditional investment paradigms and highlights Bitcoin's potential role in modern portfolios. The fundamental argument for Bitcoin as a digital store of value often centers on its scarcity, decentralization, and growing adoption. Unlike gold, which is subject to mining discoveries and geopolitical factors influencing supply, Bitcoin's supply is algorithmically capped at 21 million coins. Furthermore, the halving events, which reduce the rate of new Bitcoin creation, reinforce its scarcity, a key attribute often associated with value preservation. However, Bitcoin's price is notoriously more volatile than gold's. This volatility has historically been a barrier for investors seeking stability. Yet, when viewed through a volatility-adjusted lens, Bitcoin's performance can appear more attractive. Some financial models suggest that, on a risk-adjusted basis, Bitcoin has demonstrated characteristics that could rival or even surpass gold's long-term performance. This involves analyzing returns relative to the price swings experienced, indicating a potentially higher reward for the risk taken. The integration of Bitcoin into mainstream financial products, such as the US spot Bitcoin ETFs, is also significantly altering its risk profile. These products provide a more regulated and accessible way for institutional and retail investors to gain exposure to Bitcoin, potentially leading to reduced volatility over time as market infrastructure matures and broader adoption occurs. The increasing institutional participation, as seen with significant inflows into Bitcoin ETFs, suggests a growing acceptance of Bitcoin not just as a speculative asset, but as a legitimate component of a diversified investment portfolio. Gold, while a time-tested store of value, faces its own set of challenges in the current economic climate. Factors such as low or negative real interest rates can diminish the appeal of non-yielding assets like gold. Conversely, Bitcoin, despite its volatility, offers the potential for significant capital appreciation, which can be particularly attractive in an environment where traditional assets may offer lower returns. The narrative around Bitcoin as digital gold continues to gain traction, positioning it as a modern alternative or complement to traditional safe haven assets. The strategic decision between Bitcoin and gold often depends on an investor's risk tolerance, time horizon, and overall financial objectives. For investors prioritizing stability and a long track record, gold remains a primary choice. However, for those seeking higher potential returns and comfortable with greater short-term price fluctuations, Bitcoin, especially when analyzed on a risk-adjusted basis, and considering its growing integration into the financial system, presents a unique and increasingly viable investment opportunity. The ongoing debate underscores the evolving nature of value and the diversification of assets in contemporary investment strategies. We've covered a lot of ground today, from groundbreaking staking services to ambitious price predictions and intense trading battles. Now, let's quickly recap the biggest stories and then get your engagement going. And that's a wrap on another action-packed Bitcoin bulletin. We saw Coinone launch Korea's first Bitcoin staking service, opening new avenues for yield. We explored the electrifying possibility of Bitcoin hitting $500,000 by 2030, driven by halving cycles and institutional adoption. We dove into the fierce trading war where Binance continues to dominate global Bitcoin spot volume, outpacing even the new ETFs. And we contrasted Bitcoin's potential against gold's traditional role as a store of value. Don't miss a beat. Hit that like button, subscribe for more, ring the notification bell, and let us know your thoughts in the comments below. Follow us on all social platforms for real-time updates. We'll see you next time.